Hi, Shae Russell here, editor of the Daily Reckoning Australia, and today I thought we'd take a quick look at some changes that are happening in the oil futures market. Now, in about October last year, there was a big announcement from China that they were going to launch their own Yuan-denominated oil futures contract. Now, this got a lot of people excited for two reasons. First of all, it challenges the petrodollar system that we've got. Now, that's where all oil is priced in US dollars. But also too, a nice little tweak to the contract was that they'd be offered in hard currency, or they'd be redeemable for either yuan or they'd be redeemable in gold. So a lot of people, myself included, got excited at the idea that China was going to launch these oil contracts that could be settled with a hard currency rather than fiat dollars. Now, initially, there's been a lot of talk about this challenging the petrodollar system. In paper, that sounds like that is going to be the outcome. However, it's really not so much about challenging the petrodollar system as of yet. Now, yes, it does mean petroleum exporting countries are able to get around US sanctions. However, it's more about the Chinese government spreading their currency throughout the system. So right now, only about 16% of Chinese trade is settled with local currency. And China's share of the global payment system sits at around 1.78%. So, in other words, there's not a lot of need for yuan throughout the financial system. Obviously, the predominant currencies are US dollar, the euro, and Japanese yen. What these oil futures trading contracts really are, though, is they're about a way of encouraging the use of yuan in the system. Nobody really needs the yuan. So this way, by launching an oil futures contract, it's more about making sure that more people become familiar with the local currency and spreading it throughout the financial system rather than a genuine new petrodollar alternative. Things may change over the next decade. The only thing that does limit the idea of these Chinese yuan oil futures becoming a real threat to the petrodollar system is that there's a lot of intense government oversight. For example, Chinese authorities are encouraging local brokers to trade their local oil futures, and furthermore, the trading sessions are quite tight. Not only that, there's some pretty intense circuit breakers that the Chinese government is applying to these yuan oil futures. For example, aside from the first day of trade, where the price was allowed to either fall or appreciate 10%, normal trading caps any price movement to 5% of the opening price from the day before. So it's not a real challenge to the petrodollar system as of yet. It's more about making sure that the local Chinese currency can spread throughout the financial system. That's all from me today. Stay tuned for more. And as always, if you want to be up to date with the latest of our insight, make sure you subscribe to the Daily Reckoning Australia. Thanks and see you later.